This is Martin from seekedge, the channel for learning about trading and investment. Welcome to a new episode for Markets Tomorrow, the technical analysis show that we do daily, and this is for tomorrow, August 24th, Tuesday, 2021. If you're not subscribed, kindly subscribe now and share it to your friends and relatives. That keeps us motivated to keep doing this every day, right? And doesn't cost you anything. Thank you so much. And as usual, we will do the pre-market analysis for August 24th, Tuesday, based on the parameters mentioned here on the left side. That's all on the charts, and we will look at additional analysis on the open interest, the institutional participation, volatility, and the global commodities, and then we'll wrap it up. Okay, so without any delay, let's get into the charts and see what does market say, right? So this, we went to the Nifty 50 charts, right? So this is a kind of hammer candle that you can see. So the bull's presence is there, is indicated by the long shadow wicks, and you can see that it's exactly opposite of what happened yesterday. Yesterday it's an inverted hammer, today you have a normal hammer, right? So bullishness is there, and it has done a bounce from the previous resistance zone, right, which is a change in polarity, right? Now this bounce is weak because it has formed a, it is closed above yesterday's close, but it's very less points. So there is bull support that's there. Like BANKNIFTY, you see a kind of a, not really a hammer, but a kind of a hammer, we can say. This also engulfs the previous candle, right, completely. So and this wick is also a good indication that there is support at 35, 34, 800 levels. Buying happened, and then it maintained the 35,000 levels, right? But that bounce, was a very weak bounce again, just like Nifty, and there's hardly 90 points that came today. So what exactly happened in the intraday? If you look at the lower time frames, you can see that it was a gap up, and then it fall down and then recovered. So it's another V shape, multiple V shape kind of. This is a half, almost a quarter, 3/4 of a V, right? So it gapped up how much? If you just see the price range, so it closed here, so it gapped up 175 points, then it went down more than that, near 200, and then from there it went up 140 points. So it was an inverted V and then a V and inverted V, right? So this is the kind of moments, choppy moments that happens in the market nowadays. And BANKNIFTY similarly gapped up, did a V shape, right? So it's a V and a inverted V and a V, up, down, up, right? So that's the kind of movement that happened in BANKNIFTY also intraday. So now let's look at what does the Bollinger Band say. It says that this Q's is over, but slight expansion, same, right, happened, and that's it. Nifty, you can see that it is expanded, the volatility expansion has happened, and it slipped from slipped down from the top and then trying to bounce back, right? So that's about the Bollinger Bands. And then let's see the support and resistance levels, right? So where are we? There's not much difference. You can see clearly that the gap was filled when it moved up, right? So gap is over, and then so basically it hit the resistance at the 61% retracement level near to that. That's where I'll keep the resistance. Not retracement, if 61% of the fib projection, so we had hit earlier the 78, right? So we had earlier hit the 61 percentage above that, and then we had fallen down. So this time also it was near to the 68% of fib extension that it retraced, and then it came back and then bounced from the 16400 level. 16400 seems to be a good support level. This is the second time this is happening. The other day also 376. So 350, 16, 350 and 400, that range is becoming a good, forming as a good support. So this is a resistance zone, what you see here, right? So this is forming as a support zone basically, sorry, and it has, this was a resistance zone earlier. There's a consolidation flag pattern here, and it consolidated here before it went to 60. So this is now acting as a support. So it went up to 16700, came down, and then bounced up. So this may be a good support zone, and then this is currently at 16700 is the all-time high, and that is acting as the resistance zone. And below you have 16,000 to 16,150 range, that would act as the next support is if it slips from there. And below that you have the 6950 to 850 kind of band, right, which could be the next support zone if it slips. And above 78% fib extension, projection is 16,850, which is the upside resistance, and after that you have 17,000, which is the rounding number. Let's say in Bank Nifty, nothing much has changed. It took the support of 34,800 to 34,400, that band, and then bounced up from there, hit the gap resistance. So actually it could not overcome the gap. If you see here, we can see that it had, when it slipped down on Friday, it had formed a gap. So this gap is now resisting. So it is exactly at 34,400 is where it hit the gap and then came down. So that is acting as a resistance now, right? So it has to come above that gap to hit the next level of 35,600 to 35,900, that band, right? So this is what happened. So the gap is the one that resisted for Nifty, right? So below you have the 34,900 to 34,400 band, which is also previous swing low levels if it slips from there. But right now it looks like it has bounced from here, so it may attempt to hit the 35,600 levels and move further up, right? So that is the support and the resistance. Above you know what the resistances are, right? The all-time high is there and 36,500 is there. So two resistances on the upside. Let's look at what happened to the momentum. The momentum, you can see that there was a daily reverse divergence on the momentum, which is bullish, and that exactly seems to have worked out today, right? When it moved above the low of the previous day's candle. So it seems to be, and it is not completed. So if it works out, it will reach up to 16,700, right? Bounce can be up to 16,700 if this bullish divergence works out, right? So that is what momentum is, but momentum is intact in some zones. Bank Nifty, the momentum has not, it has taken a twist turn towards the upside, but it has not climbed to the bull zones. It has fallen to the sideways, and then a slight uptick happened today. And trend wise, if you see Nifty's trend is in the bullish zones, and it is Gone a little flat on the strength, but strength is 33 above. It's good enough. Very good strength in the momentum, and it is in the bull zones. Bank Nifty's momentum, if you see, it continues to be in the bearish zones after the crossover that happened on Friday, and it has dipped a little bit, and the strength is very less. It is 21, right? Below 25 is less strength of the trend, and it is in the bearish zones. So that is a primary difference. Now we will have to look at what exactly happened in the market, the open interest, right? So I don't think the futures open interest data has come for today. Yes, it has come. So it's a short covering that happened today, right? That's what the data for the futures open interest in Nifty showing. Short covering is slightly bullish, means it's bullish actually. So people who are short now started going again back to uh, being bullish, right? And Bank Nifty, what has happened? That is also 23rd today. Short covering is what happens. Both indices, open interest has changed to be short covering, which is slightly bullish on the open interest of options data for the expiry that is going to happen this Thursday, 2 days from now. The PCR is 0.9. It was above 1 and it has dipped to 0.9. So it's not greatly bullish as it was earlier. And Nifty, Bank Nifty is 0.68. It is not at all bullish as per the put call ratio. In the Nifty, the highest resistance is seen at 16,600. Right? Today also it attempted near half 15,550 till there, right? And the highest after that you have the highest resistance is at 16,500. 16,600 and 16,500 is the resistance zones, and 16,500 also happen to be the support zone. Yes, put trading is there. After that you have 16,000. You have good supports in the 16,400. The Inter all have got good enough supports, right? So yeah, so it is between 500 and 600 is probably that's what the action is happening. So today you can see that a lot of unwinding has happened on the call side. You can see that 16,400 levels people have unwinding has happened here. There is more call rating also got added 16,600 levels, right? 400 level the resistance is gone and now it is moved to 500, 16,500 anyway. So that is the open interest data that it's talking about. Now what happened to the VIX today is that it is slightly dipped after hitting the 14. You can see that it has settled at 13.6. So intraday movement of the VIX, if you see, you can see that yeah, so this is what happened morning when the market yeah, so this is interesting. When the market moved up, right, in the morning, actually when the market moved up, it then it dipped. So VIX shot up to 14.3 levels. That's probably the highest in the recent. And then it market recovered, V-shaped recovery happened. It dips, and then it stayed flat. This is the action. But finally, it settled at a lesser VIX than yesterday. Now that's the volatility, but also if you see the IV charts for the Nifty, you can see that for yeah, so it's the IV percentile continues to be below 14, right, and the implied volatility is greater than the historic volatility. So it's still in the low volatility regime, right? And institutional participation, if you look at the data, what happened today was the data is not updated here, so let me check once again. The data is not updated here for 23rd, but 23rd August data in the cash is saying that the Fyers sold 133 crores today. Oil DAs were the ones who kept the market, 1,450 of kept the cash market, 1,450 crores of buying happened. So that is the Fyers is in the selling mode. Yesterday, last There is so several days it has been selling. So previously, last Friday 2,200 selling, 500 selling, so it has been selling for the last 5 or 6 days, right? The AS have increased in the buying mode. They were also not buying too much, or they were also selling last week, right? Hardly any buying was happening, but now they have increased the buying, which is supporting the market. Now, sectorial watch. This is the interesting thing. You can see that if you look at all the sectors, the only sector that performed today was IT. Apart from IT and nothing else, it's all red. Right? So this is the action in the sector. Let's see the charts and try to understand. So IT was performing; it's going vertically up, right? And so the dollar was strengthening, and the IT is moving like anything. Right? Almost all the stocks in the IT are bullish, and then weekly, there is a divergence. So I'll be a little slightly cautious, right? Since it is a vertical move that has been happening non-stop. Now metal, it has dipped. We already know. So now it has gone to the bearish zones. And yesterday it was at the support zone. There was a chance that it would, it could have bounced from there, but it has slipped further. So metal is turned bearish. Auto has was already bearish. It has further turned bearish. If you look at the price movement that has happened today itself, there was a 2.5% dip that has happened. So it's clearly bullish. You can see that the M pattern that is formed is already broken. It had broken down, taken the support as a major support zone. So this was a major support zone, which is the reason why it. So that support zone made it. Now what is happening is here, right? So that support zone is the reason why it bounced up, but it could not sustain, and it fall down, and that support is also broken. So now it is in clear bearishness, right? So the only thing is, yeah, you have to pick the right stocks and see this. So auto sector can be shorting candidate. It's clear bearishness. Metal has also turned to bearishness. Pharma is also turned to bearishness, right? They slipped to the below 40 on the momentum. And the charts are also showing that the rally is over. It is, higher top, higher high is all gone. Now it is consolidating, and then it is broken down. Now lower low will be start forming, and it seems to like it may fall. But there is a support here. There is a support zone here, right? So just we can wait to see if that goes below that or not. This level, 13,400 500 levels, if that is breached or not. So pharma is bearish. FMCG had broken out from the W pattern the other day, and then it had broken out like anything with great momentum in all time frames. But today it did a small pullback, right? After 6% of move, just pullback, but it's bullish. So auto, so IT and FMCG continue to be bullish, just like last Friday also just seen. And rest all realities bearish, turn bearish, right? Rest is all bearish. So only IT and FMCG, all both defensive sectors. And that's the sectors in sectorial watch. And now if you see what happened to the USD INR, before that let's see what happened to the dollar index. Dollar index, it to actually give a kind of trap. So it had broken out of a very long consolidation W double bottom pattern, and then it broke out on Friday above the 93.4 kind of levels, and then today it dipped back. Right, this is a big wide range candle dip that has happened today, right? So that has turned, yeah, so 0.5% of down. So dollar index is weakened, and the breakout does not confirm that it has happened, right? It is probably a trap. Now, but the currency pair, INR and USD dollar currency pair, that also has dipped, but it is well within the in this zone, in this major support zone. So right, so it extends to multi-year, multi-year support, resistance turned as support, like, yeah. So this is where the action is happening. So if it is breaking down from the 74 levels, then it can go up to the channel bottom, right? Right? Means, yeah. So right now you can say that it has turned bearish because the dollar has weakened. So that weakness is reflecting in the currency pair also, right? Now, Brent oil had fallen to 64.4 levels last Friday, and it has recovered, and then see, it has formed a very good wide range bullish candle. So almost looks like the open is going to low, right? Which is very bullish pattern. Wide range open is low candle pattern. So the crude may continue to not, because this was a fib 23 levels, I guess, right? Yeah, so this is a fib 23 on the last swing, COVID swing, 2020 April swing, and this was a 23 level. So it has hit the $77 levels, and then it retraced and corrected to 23 fib levels, and then bounced from there. So this seems to go further up and then halt here at the 70 levels, because that is a major resistance zone. So that is good for our markets if the oil prices are coming down. It's not, um, yeah, as long as it stays below the 70, it's good. Yeah, so the gold price has shot up today. A good bullish candle can be seen here, and it has broken out of this resistance zone, which is a good thing, right, as far as bulls are concerned. So you can see that this is a major, resistance zone. Right? You can see that there is consolidation that is happening multiple times at this level. Right? Now it is broken. It is broken out of that. That means it is going to head to this level of the candle, right, to the channel top. That's what it looks like. It had attempted to do that in June month and hit and fall down, and then again attempted, stopped here, and then fall down, and then now this is the third attempt to hit the channel top in the 2021, right after Jan, right? So gold is strong heading. So whenever the dollar goes down, normally gold strengthens. Dollar weakened slightly today. So that is what the global commodity markets, and what is the global markets? It's all green. Nasdaq is 200 points up, and Dow Jones is also slightly in green, and Zimbi 500 is also 40 points up, and European markets and Shanghai Asian markets all is showing green as of now, but let me check next day. Nasdaq in the weekly was showing some uncertainty candle, but that is all, right? See, you can see that there is doji dragonflies, 1 2 indecisive candles, dragonfly, but the wicks are high, which indicates there's bullish pressure, and that is over now, right? Because the candle has gone up. We know that it's going to how it is going to close, but weekly there is some kind of, but that is overcome now, right? This is, so US markets and global markets just don't have any major bearishness, at least it's not seen as of now at this time. So that's about the analysis, and then just to wrap up, what happened today is very clear. It bounced from the support zone. Both indices bounced, but it was a weak bounce, right? It went up, and then it could not sustain there, and then it came down, but right, it recovered. No, it recovered. The presence of the bull is there. There is bullishness in the market. Bank Nifty continue to be concerned because the trend in the momentum is bearish. Nifty is intact, absolute no change in the bullishness in the Bollinger Band trend, right? Um, and regarding the bank nifty, it is not it is not clear, like how how to react the next day, but overall, uh, yeah, so it has regained the 35,000 levels today and bounced back, which is positive. It closed above the 35,000 today, and it bounced from that support level. Yes, so the wick shows that there is support level, so that much is not bad enough for bank nifty, right? It could be attempting. So the hammer is some kind of, the long wick of the hammer shows that it may attempt to further move up to hit the next resistance on the industry, but bank nifty is only concern major. Fyers selling is a concern. Right, today also they sold 1,500 near to that close. Yeah, but the US dollar strengthening is kind of the bearishness, slight bearishness is seen. So the strengthening is slightly halted, looks like, right? And so that uh, and the markets, US markets, the stock market, equity market also is not showing any bearishness, which is positive. So the rally in the bull market may continue is what the feel that we get by studying at the charts of. Um, but definitely one thing is sure that if the Nifty now has to move up, it has to have the banks. So it should have the banks also to come along with them, right? Because as of now, the only sector performing is IT and FMCG a little bit. So otherwise, all other sectors are not at all performing, have all changed, moved to the bearish zones. Metals and autos and pharma, it's all moved to the bearish zones. It's a major concern. FISLE sectors, most of the sectors not bearing, going bearish, right? And Bank Nifty not able to move up above the resistance is bearish, but yeah, so there is bearishness still there overall if you look at. So we have to, positionally we'll have to see whether the 16,000 is reaching on different dips, and whether the 16,700 can be taken out, and can it move further is a question, right? So yeah, so intraday play, you've seen that it is inverted V and a V that is happening. So that's the kind of moves. So you cannot, if you're trading on intraday, it has to be purely based on the lower time frame swing highs and lows, right? And that too, you go long or short depending on whether it is breaching the previous day's high or low, right? So every swing low or swing high would be your stop losses, and you never know when it is going to get sold or get bought, whether down or upside. So that is a difficulty. VIX wise, it is not at the very bottom levels at least, which is seems to be moving on the upside towards the 15. So hopefully selling will become more easier for the option traders. Yeah, so overall slight bearishness. Trade with caution is all that we can say. Actionables is like the theta decay starts on Tuesday. So probably 2-day swing option calendar spreads, which could be tried on the indices, and some picks in the FMCG sector and IT can be used, because those are the two sectors that are bullish. So some of the stocks on that sector, any of the stocks on these two sectors, wherever the breakouts have not gone too far, such stocks can be traded on, right? That is actionable that I can come out with. So I believe that this is of some use for you to consolidate and reconcile what happened, and then look at how you can plan your trades, as per your risk appetite and as per your criteria and rules. So if this helps you in some way, please hit the like button and subscribe if you're not, and share it to maximum to keep us motivated to do this. Right? Thank you so much for watching, and have a great trading and great learning.